right, everyone, good morning. Welcome. We are pleased to welcome Jon Najarian and Marc LoPresti. Jon has earned the reputation in the industry as an options trading expert and pioneer. He developed and patented trading applications and algorithms used to identify unusual activity in stock, options, and futures markets. He can be seen weekly on CNBC, where he's a cast member of the Halftime Report and the Fast Money Show, and is the author of 4 books, the latest one just released, titled Follow the Smart Money. Marc LoPresti is the founder of IDI Group, a multi-family office-backed VC platform that has backed portfolio companies since its inception in 2019. He's also a founder of the LoPresti Law Group, a co-founder of Battlefin Group, and is recognized authority on alternative investments. He has been frequently a contributor to CNBC and other domestic and international financial news networks, as well as a frequently and featured speaker at conferences focused on alternative investments and family office investing. Gentlemen, thank you so much for taking the time out today. It's all yours.
Well, thank you, Mark. Marc LoPresti and I are delighted to join you guys and give you some insights into cryptocurrency, fear and greed, supply and demand, all that fun stuff, all the things, Mark, that drive investments and drive markets up or down, right?
Yeah, absolutely, Jon. The timing for this morning's session could possibly not be better. And I'm going to credit Kim and the team for some remarkable prognostication to schedule us just 2 days after what is arguably the most volatility we have ever seen in what is already a remarkably volatile marketplace. And what we're here to do, folks, and thank you again to Kim and the team for having us back. We enjoy doing this every time. What we're going to try to do is unravel all of this for the Money Show audience, the Money Show Nation, as I have come to lovingly refer to it, to help you make sense of what's going on and help you decide, is this the time to get back in, to buy, to sell, stay on the sidelines, deal with the FOMO or the HODL, or I don't know, what's the latest one? Did they come up with another acronym today, Jon? I can't keep up with it.
They've been using FUD a lot, fear, uncertainty, and doubt,
right?
Because an awful lot of people think that that's what Elon Musk has been spreading, fear, uncertainty, and doubt. Certainly the uncertainty part, Mark, to a certain extent, fear. And I doubt that Elon thinks too much before he tweets, even though he's a super smart guy. I think sometimes, like other people, perhaps even some in politics, he's just addicted to Twitter. And he loves the adulation. He loves the retweets and the hearts, the likes, all that kind of stuff. And you know, so he loved it when people loved him. He didn't really like it so much, Mark, when everybody kind of turned, when the crypto crowd turned on him after Saturday Night Live, even though, of course, that's scripted. He didn't go off script. You know, that was all scripted. But that was, I think, Mark, one of the great buy rumors, sell news events that we've ever had in the markets. Because
no doubt.
We knew he was going to be on. You know, and we knew Doge was his thing. Full disclosure, I own Doge, not as much as I owned into that particular Saturday Night Live episode, but I've bought back into Doge in a fairly substantial way. We'll see if that ends up. I mean, you know, cryptocurrencies, folks, the reason you're tuned in with Mark and I is that Mark and I have dealt with exchanges. We've traveled the world together, meeting in Milan and London and Monaco and Zurich and Geneva with Zug, Switzerland, with all these different either mining companies, people that are looking, like family offices and so forth, that are looking to get into crypto. And, you know, we'll share some ideas and some of the ways that Mark and I trade. But yeah, I'd say you're right, Mark. All those acronyms, Whiskey, Tango, Foxtrot, all of those sorts of acronyms that apply to crypto. Sometimes fear of missing out or FOMO really gets the better of people, especially when the cryptocurrencies making that lift like it did from basically just before the election when it was 10,000 to running all the way to 64,800 just a couple weeks ago.
No, absolutely. And, one of the things that I think frustrates me, and I know it frustrates you and others that are in the industry in one way, shape, or form or another, and, also by way of disclosure, we'll tell you if we're talking about a crypto that John owns or that I own, or a particular company that we do business with. I'm a managing director of a newly launched crypto fund, John, that you know about, that's trying to make sense of some of all the madness. But what I think is frustrating for those of us that do this professionally is the amount of noise, the amount of clutter, making it harder for people to understand. And folks, there are a couple of primary drivers of the price of the main cryptos. And as you go further down the list, I'm not going to be able to help explain, but when it comes to Bitcoin and Ethereum, Bitcoin in particular, I'd argue there are some pretty basic principles, some of which we've shared with you on Money Show segments before, that can help explain what's going on and have you prepared for the next big price movement. So John, maybe with that, you prepared some slides, or someone did, prepared some slides that you're going to share. Maybe we'll flip through those quickly.
Sure. And we're not going to, again, hopefully nothing we're going to do is going to bore you folks. But some of these slides, I think, will sort of point out some of the things that have been going on in the crypto market. This slide that you see on your screen here is just half a day old. This is total market capitalization of the crypto world, if you will. So this is, I could have shown you absent Bitcoin, but this one's actually less volatile with Bitcoin than just the altcoins alone. And when we say alt, we mean an alternative to Bitcoin, because Bitcoin is the grandfather, the godfather of all of these coins. But take a look last, I guess that was Thursday last week, the 19th, the market capitalization of all of these coins together was over $2 trillion. You'll see that on the left side of the screen, the red arrow. When you go over to the green side of the screen on the right, the green arrow pointing up, that's where they bottomed at 1.25 trillion. So in other words, you wiped out $750 billion across all of crypto land in just a matter of days. Some of those days were much more volatile than others. To give you guys an idea, volatility, Mark said, what do we use for triggers? We use several, and we'll describe them throughout the presentation, but volume, volatility, and sentiment. And sentiment is one you don't want to overlook. The fact that if a bunch of people, not bots, because there are a lot of bots, meaning that it's something that an account on Twitter or on Reddit that somebody created, and they might have 50 of them, and they might be set up so that whatever one says, they all say, and they've got no followers. If it's on Twitter, they've got 2 or 5 followers. That's a bot. And they're trying to either instill fear, uncertainty, and doubt, FUD, or they're trying to get FOMO going, that fear of missing out. And when we see those kinds of social interactions, we tend to basically tag those bots, and the artificial intelligence we use, and a friend of ours, Alex Macioli at Trade the Chain. Again, we'll get into that in a little bit, but when we see stuff like that, we dismiss those bots. We want to pay attention to when Kim Githler or Marc LoPresti or somebody real that has real followers is saying something that, the keywords in what Mark or Kim might say could drive markets, could be part of that lift or part of that sell-off. So that's why we monitor, like I say, social, which would be Twitter primarily, and Reddit, as well as volatility and volume. But this drop, as you can see here, and it's got the underlying volume, the 24-hour volume underneath there, there were several times when $750 billion worth of crypto were trading in an hour. I mean, it's just amazing how much can trade. And Mark and I have some ideas about why some of that might go on. This is just a quick chart. Again, you don't need to focus on these, but to give you an idea of volatility in 2018, when crypto, because 2017, we shot all the way from like 2,300 to 20,000, roughly, in rough terms. 2018, it was all about selling off. And as we sold off in 2018, you see that reading of 136 for volatility, which was the high until recently. And this past week, we topped that one. This is Bitcoin price versus volatility. I would have loved to have shortened up this chart, folks, but basically this is showing you in the lighter color, I'll call it sort of a beigey green. That is the price of Bitcoin. And the other side, on the left side of the graph, and that blue line, that is volatility. And volatility made some dramatic moves. This is in percent. Keep in mind, every percent is 16. So in other words, if you see a VIX of 32, that is a 2% move. So that would be right down there near the bottom of that. Much of this was pushing towards 6%, which would be 6 times 16. And these were extremely volatile days.
Hey, John, can I ask a question?
Sure.
Is there a way to easily and readily trade Bitcoin volatility? Is there a VIX-like instrument that folks can look at either as an indicator or something to actually trade?
There are several. The best one, I think, Mark, and it's not a leading question, folks. We didn't prepare this one, but Deribit is an offshore exchange. There are several big offshore exchanges. You've probably heard of Binance. You may have heard of Deribit or FTX or a number of others that you need to access through a virtual private network because Americans aren't permitted to go there. So instead, people like me that want to mask that go through a VPN to get there. Why? Because Coinbase and even, a firm that Mark and I are investors in, Voyager, they might only have 50 or 60 different coins. And that is about 1% of the coins that are out there. There's about 6,000 coins in the wild. So if you're talking about tracking volatility, like Mark said, since there are so many exchanges, of course, there's the CME, and CME is a big, robust institution, but it only trades about 1/10 of the volume of Deribit. So when I look for volatility, Mark, I go over to Deribit and I see what they're posting as the implied volatility and historical volatility. Historic's easy, but implied isn't, because you need volume to get to that implied volatility. And like I say, they have most of it.
So what's the trade? So coming back to the title of this session, which we've used for a few months now, and we've kept it because I think it works, crypto tips and tactics, trying to help folks understand how the smart money trades. So if I want to trade the vol in Bitcoin, just to sort of specify the question, well, what instrument would I use if I went to one of those exchanges?
I think, I basically either set myself up with call spreads, Mark, when I want to trade the vol, or sell actual futures and buy an option against it. So for instance, like right now, crypto is kind of the reverse of equities, folks, in many ways. You've heard us say many times, hopefully, that when volatility is high, that's fear in the streets. There's something that they call, Mark, a greed and fear index. Mm-hmm. And that greed and fear index is more or less from 0 to 100. And when it's on the low end, that means you could view it as this is the number of people out of 100 that want to buy. So in other words, this week, it was at a number of about 20 as far as that fear and greed. That's near the lows that we've ever seen. The lowest we've seen is a single digit 9, which would mean 91% of the people want to sell it, or are trying to get short. And a reading in the 70s or 80s, which we've also seen this year during those fear of missing out times, is telling you that 70 or 80% of the people want to buy instead of sell. And, you know, most of us would say that when markets get too frothy, that's when, you know, the Warren Buffett thing kicks into Mark's head, my head, everybody who's ever traded, whether it's on a trading floor or upstairs, that when people are greedy, you want to be fearful. So when they're greedy and I want to be fearful, I generally will sell a Bitcoin, Mark, and buy a call against it, even though that's high vol. And I'm doing, or I mean, it's not high volatility. It's because that fear of missing out means that everybody might be in the pool and who's left to buy. And then when we go down and smash like we did this week, down into those single digits or 20 readings of 20 and so forth, that's when I want to say, okay, so everybody's fearful. That's when I want to be greedy. So that's when I'm putting on spreads down there.
And by the way, folks, there are some pretty simple tools. Most people, when they're getting into trading, they'll open a Coinbase account. You've actually got that buy sell indicator here showing what the actual buying volume versus selling volume. It's a bit behind in terms of trying to anticipate or skating where the puck is going. You know, as John indicated, he tends to take, using all of his experience, a bit of a contrarian view. When the buying gets too frothy, then you start to think you've reached the top. But there's a lot of basic tools that are available that can actually help you start to learn and start to study and learn how to use these indicators. And they're really, really important for tracking and understanding the volatility and the movements in these cryptos, particularly Bitcoin.
And this next chart you're looking at, folks, I think plays right into what Mark is talking about, because most of you, if you haven't traded Bitcoin before or any alt currency, whether you want to call them cryptos or not, digital assets, most of you would probably say, well, if I want to buy it, I'm going to buy one, or I'm going to buy a fraction of one, which you can do, of course. You can break a Bitcoin into a million different pieces, folks. They call those sats or Satoshis. But what you do is you need to focus on that there, other than foreign exchange, there is nothing on God's earth that has as much leverage as these Bitcoin exchanges will give you. Deribit, Binance, many of these exchanges will give you 20 to 1, 50 to 1, 100 to 1 leverage. So only foreign exchange compares to that. So think of that for a second, folks. When Bitcoin was hovering at that 40,000 mark a week ago, and you saw that, you know, it was 2 trillion market cap from a couple slides ago. When it's hovering there, you have an awful lot of people that have made money this year that might have 20 grand in their account. These aren't the whales with millions or even billions of dollars like Michael Saylor or Elon Musk. These are regular Joes and Janes that are buying and selling, and most of them have made money on the way up. So what would they likely do when Bitcoin falls from 58,000 down to 40,000? They're looking at their charts and they're looking at their versions of social media and all the rest, and they're saying, I think this is a line in the sand. I think support and resistance right here at 40,000 is really strong. So what do? They either, number one, lever up, and if they have 20 grand in their account, they could buy half of a Bitcoin if they fully paid for it. Instead, if they want to use, for instance, 10 to 1 leverage, they could buy 5 Bitcoin at that leverage. So they own 5 Bitcoin at 40,000. How much does Bitcoin have to move, folks, before they exhaust that 20,000 of their money and start cutting into derivatives or Krakens or Binance's money? The answer is not much.
Right.
It falls to 37,000. You're losing 3,000 per coin times 10 coins would be $30,000. You're already $10,000 deep into Binance's pocket or whoever. And so at as soon as you approach those kinds of critical levels, the firms start automatic liquidations. And last week, 800,000 liquidations occurred. So 800,000, nearly 1 million people's accounts were liquidated. When you look at this presentation here of these liquidations, you see that last week, that big green spike there shows you, that it was $8 billion in liquidations that occurred just last week. And, those kinds of things occur because people are over levered. Now, they might have also shorted puts because some people, I'm sure many of you know these kinds of people, think if a market's going up, I'm going to short puts. I'm going to sell a put contract, which is an insurance policy. It increases in value as the market drops. And so they get in there and say, you know what? I'm going to sell 10 puts here at 39,000, give myself a little cushion because I think 40 holds, but 39 is going to hold for sure. And I'm getting $1 for each one of these puts I'm selling. All of a sudden, again, it falls to 37. Each one of those puts is worth $2. The person's over levered. They're liquidating. In this case, that means they're buying back those puts, which puts more pressure on the market. Both of those things, either liquidation of futures or buying in of puts, puts downward pressure on the markets. And that's exactly what we saw last week.
And that, fundamentally, folks, understanding the nature of leverage in any marketplace with respect to any security or any financial instrument is really important to understanding and investing in that particular marketplace. And as Jon said, you can get, because of a lack of regulation, a lot of these exchanges will allow you to lever as much as 100 to 1. That is massive, massive leverage. What that means is movements in price that are catalyzed by news, whether it was China talking about restricting citizens from owning crypto, cracking down on mining, the Treasury talking about the proposal for CTRs, currency transaction reports for movements of crypto in excess of $10,000. You had a lot of regulatory concerns. There was even news out yesterday. Is that stuff relevant? Yes, it is. But what happens is a price movement that would normally be this much in a market that has normal leverage applied or allowed is magnified this much, where you've got 100 to 1 leverage type of environment. And then the computers kick in, right, Jon? And selling begets selling begets selling. And folks, what I would actually argue is, and I know it's going to be hard to swallow for folks that lost money last week, this is good. Letting some air out of the balloon, taking some leverage out of the market will actually serve to smooth out over time, to smooth out the volatility. So I don't know about you, Jon. I didn't sell a coin during all of this. I think this is the kind of stuff, maybe not to the degree and with the swiftness that had occurred last week and over the weekend, but this is the kind of volatility that we said. If folks want to go back and watch recordings of the last ones we've done these with Kim about once or twice a month since the beginning of the year on this topic, that this volatility would occur, be prepared for it, but that the upward trend line, and Jon, I know our opinion is shared by Kathy Wood and a lot of others that are as smarter perhaps than both of us in this stuff, that the trajectory is still to the upside for Bitcoin for 2021. Do you agree with that?
Absolutely, Mark. Absolutely. And I don't know that I have the same outlook as Max Kaiser. Max is a dear friend. Max and Stacy are very smart people. They've owned Bitcoin. They tried to talk me into it in 2013 and I didn't do it. I wish I did, of course. Started buying in 2016, really small, 2017 in a bigger way. But Max's target is 220,000 this year.
Yeah.
Now, could Max be right? Hell, he's been right about a lot of other things. So sure he could. I'm not as bullish as that, but I do think, folks, that within the next 3 to 5 years, we will see Bitcoin closer to $1 million than it is today. That's my prediction. And
that's a pretty wide spread there, Dr. Doge.
Yeah. Well, I'll also say, though, that, and Max won't like hearing this, I will also say, Mark, that I think Ethereum flippens. I think the flippening is happening. And I think that means that Ethereum, the market cap of Ethereum will surpass that of Bitcoin.
Wow.
It has already moved up to, at one point, just in the last week or so, it was half of Bitcoin. It was where Bitcoin was last November, in fact, that quickly. Because
by market cap, not price, obviously.
Yeah, market cap.
Yeah.
And it's just such a useful contract. All the smart contracts. There are other ways to do it. You've got Stellar and a whole bunch of other coins that help you do what Ethereum does. But I think Ethereum is the granddaddy of all those. So that's why if you only own two, I would own those two. I'll just show these folks this, Mark, that Bitcoin whales. A whale is anybody with 1,000 Bitcoins or more. We could define that differently for Ethereum, of course, but there are 2,500 people that control 40% of the market. And they are the lucky people, smart people that bought into Bitcoin, probably not like Elon Musk, although I'm sure he's a member of this group now. But unlike Elon Musk, many of these people are more like the Winklevi, the twins that bought in when their coins were being purchased by Charlie Shrem from $9 up to $35. That's $35, not 35,000, not 38,000, but that's where Bitcoin is today. I'll skip this slide and say, I know Mark liked this one because, again, this speaks to that. This is from CNBC, folks. Bitcoin traders using 100-to-1 leverage are driving the wild swings. And yes, they are. And those that over-levered, learn that you can get burned on those trades pretty quickly. And with that said, I'll say that our friend Alex Macioli, he has a venture called Trade the Chain. He also has a great YouTube channel where every week they do a discussion of what's going on in crypto and so forth. And that is something that Mark and I pay close attention to. We said it at the top of the broadcast that these days, as in crypto, you need to know where that FUD and where that FOMO is coming from on Reddit, on Twitter. Alex really highlights that. And then Mark and I can really focus in on volatility and volume because that's something that we do really well.
You gotta understand the fundamentals, folks, and hopefully what we've done this morning is touch upon some of them. Understanding that how levered this market is helps prepare you and understand for the volatility and the violent price movements that will occur and will continue to occur in this burgeoning asset class. The Reddit rebellion, as we call it, the evolution of sentiment as being one of the biggest catalysts moving not only the equity markets. We saw that, of course, with GameStop and AMC and all of that wonderful stuff in the first quarter. We hear clients at Battlefin, a data company that I founded that John is an investor in. We talk about sometimes that is the #1 most demanded, requested type of data these days is sentiment, understanding what's being said by market participants on social and other types of channels. The last thing I want to mention, because we've talked about this before and it has not stopped, and I believe it's going to continue to be one of the major catalysts, one of the major drivers of Bitcoin and other crypto prices for the foreseeable future, and that is institutional acceptance. What you've heard John and I say, folks, many times on this medium and others, is that if there's one thing you can count on in financial markets, and there are a few things that you can count on 100% of the time in financial markets, it's that institutional acceptance of a new asset, new security, new asset class drives upside appreciation and value. Always, always. one of the main things, to me, the most relevant driver of appreciation of the Bitcoin price in 2021 Q1 was just that, institutional adoption of the asset class. What's news? What's interesting since we last talked to you folks about this? ESG, environmental, and the new focus on the impact of Bitcoin and crypto mining on the environment, energy consumption, things of that nature. You see China shutting down Bitcoin mining, the amount of pollution being created by Bitcoin mining because of places like China that do it burning coal. This is something we could talk about for at least an hour. Google it. This is going to be one of the next significant drivers. You're seeing adoption within the industry of bringing Bitcoin mining and the industry of cryptocurrencies into ESG, environmental, social governance, value-driven principles. Our mutual friend, of course, Kevin O'Leary, being one of the loudest voices in that cacophony, along with people like Michael Saylor and Elon Musk, perhaps trying to redeem himself from driving everybody crazy with his 3 a.m. rants. But as you see the industry coming more into compliance with what is one of the biggest macro themes of 2021, folks, in financial markets in general, ESG, environmental, social governance, responsible investing, you're going to see that as another driver, institutions being willing to come into the market, hold these assets, upside price movement and appreciation.
Yep.
So, Mark,
With
at the
that,
Money Show, how much time
I was
we
going to
have
say,
left?
Mark, we'll just throw it back to the Money Show.
Yeah.
But we will say that Mark and I will be in person, and we're delighted to be in person. Money Show in 2 weeks.
That's right.
That's basically June 10th through 12th in Orlando. Make sure you check it out at moneyshow.com. The great folks there have managed to pull it off and have a big in-person event in Florida. We applaud them, and we hope we see you there.
That's right. Mark, at the Money Show?
All right, gentlemen, thank you so much for that fantastic presentation. Just one quick note, we have about a minute here. Question, if there's an industry acceptance for Bitcoin, what happens when that maximum of 21 million Bitcoin is mined?
So people ask that question all the time, and I think the simplest way of answering it, and John, I don't remember exactly what the date is, but do you remember how long it's going to take for that to happen? Because every time I'm reminded of that, I kind of take that question off the table.
Over 100 years from now.
Yeah, thank you.
And even with quantum computing and so forth, folks, the way that the algorithm and the puzzle is set up, the miners for this proof of work, in other words, all those nodes out there in the world that are doing that mining that Mark spoke of, hopefully doing it in a green way, but those miners get less and less rewards. It's called a halvening. As we go forward, the next one will be 2024. The number of rewards they get will be half of what they get now. So in other words, it's not a straight line. They get less and less and less, which extends the line out to over 100 years from now, when they finally have mined the 21 millionth Bitcoin.
And the puzzle, the mathematical equation that these miners are solving with each Bitcoin transaction gets harder. Yeah. With each transaction, as every minute, every day, every hour passes, it gets harder. That Bitcoin mining, hash rates, and all of that could also be the subject of at least a 1 hour session. If anybody wants to learn more about that, you'll see John and I in Orlando. We hope you're all there. Come hit us up. We'd be happy to talk about it.
All right, gentlemen. Well, thank you so much for that brilliant presentation today. And thanks for taking the time out, joining us again. Always a pleasure to hear you.
Thank you. Appreciate it, Mark.
See you later, John.
See you, Marc LoPresti.